Okay, ladies and gents, it's my first stream of the week. I've not been feeling too great, so a little bit. I think it's been a bit of a bad omen for me. I've not done my streams, and I've had two break-even trades, poorly managed, probably on my part. I'll run through them in a bit once we've profiled the market today. Let me just clean the slate. Thursday, is there any news today? I think there is. Yeah, Trump spoke yesterday, didn't he? All assets have run above the previous day's high. I haven't had a chance to do my journal, so I'm just going to do it as I'm talking. And if you haven't got a journal, you know my views on that already. You should have a journal every day. Even yesterday, I've been trading for 5 years and I'm still filling out every day. Okay, let's do some top down. First I'll look at the daily on the bond market. Let's see what's happening over here. This will give us an indication of what's to come on the FX market. It looks like we're playing within this range. Still got a level of liquidity above here on this market. So yeah, we could go up, but it looks to me like we're playing within this range. Right. That being said, we've got a bearish profile, so we could expect some bearish price action coming into, although all the assets are swept below, but we are bearish, right? So I'd say, okay. Then I'll drop down to the weekly time frame. Want to see, I did explain this as well, but it's the same theory applies, right? In predicting the next bar, the market tells you what it's going to give you, right? All right, yeah, it's a high probability. So if we close below this low here, close below, this candle's closed below, we've got bearish price action, right? Overall, our draw of liquidity, high probability target is this low, right? It's projected targets. None of the highs or lows have been taken, so liquidity is still there. Draw of liquidity would be the low. We're waiting for price to show us and give us an entry regarding that. Monday's price action range. If we manipulate lower, we're going higher. So if that is the case, I know we've got a bearish weekly, but Monday formed a range. We wick below, price gravitates higher. And what have we got? We've got a bullish daily profile. Okay, so closed above. Did we actually close above? Yeah, we got a little close above. Anyway, but for my model, I'd only need to see 2 assets close above. So that's what I'd be looking at. Looks to me like all the assets have wicked above previous day's high. Could see some continuations. Could, you know, I will draw in the 50%. Just remove that. Get rid of all these old alerts. Gosh. Okay, so bullish daily profile. And if we've already taken previous day's high, what do we need to take a trade, right? We need some more fuel for the upside, right? We've taken this liquidity, so we've taken buy side, yeah. In order to run higher, to take this level up here, we need to fuel the move, right? So we need to take some sell side, whether that be rebalancing price or forming a daily or something like that. I'm not looking to trade this until I get the opposing liquidity taken. Okay. One thing I do as well is I'll just mark this previous day's high on all the assets, and I want to see if the 6 hours closed above or we have wicked above. If you're on the weekly, you would use a daily. If you're on the monthly, you would use the weekly. That's a key bit of information there. Nuggets. Alright, so 2 out of the 3 assets have wicked above. Alright, so we can start to get an idea of what's happening now. You know, price needs to rebalance unless we have a daily. Let's take the GAN box, get that equilibrium level. Wick above, close below, or 50%. An SMR level would be okay for a long as well. I would be looking at that. Look, what's happening now? 7 AM. Looks like we're going to go and take Asia low. So eyes on this standard deviation level. I think we're still working within that weekly range, aren't we? Yeah, thick full body candle, wick above. You know, we've closed. I think, did we hit 50%? Oh, we've hit 50% on 6B, that's what it was, not on 6E yet. Okay, so we've still got this EQ point here. If we are going to trade a little bit lower, or we could go higher. This is trading and anything can happen. But you can see I've got the candle low marked out there. That's the reason why that is marked out like it is. Let's go out to this. Thursday is built for reversals. Highest probability day for reversals, so we could see something happening here. We're definitely getting an injection of liquidity at 7 a.m. Good time to trade. Yesterday there was a trade at 7 a.m. I took a break even because I moved my stop a little bit quick, I think. Should have gave it a little bit more room to breathe, but I'll go through that in a sec. I'm just going to mark out price now. And my throat seems to be giving in. Sorry. Have a glass of water. Sorry. My stitching's coming out of my surgery I had on my nose. Okay, so we're getting a daily as well. Maybe we can get into this standard deviation box. That'll be a nice, we need a full body close though, right? On the hourly, or we need this hourly bar to close anyway at least. Q standard deviation, I'll mark out these, we're getting a daily now. If the draw of liquidity is higher, we need to fuel the move, right? It's all about taking opposing liquidity. My whole theory and model is built around taking the opposing liquidity. And if you've ever seen my streams, I always measure Asia range just so I can profile the day. And this isn't 100% accurate, nothing is in traded, but it gives me an idea. If we've got a range at the moment, the wick should form in London. Okay, so if we're pushing down in London, you know, the probability is on our favour that we might push back up going into New York. Okay, so we could look for buys. I mean, as a bullish daily profile anyway, look to buy below the open. But we've already taken the high, so that's why we need a little bit more confluence. We'll be back in 2 seconds. Well, that's fun, isn't it? Sorry, bit of my stitching decided to come out while I'm midstream. So we're waiting for price to build here anyway. This is going to be an area to target, to look to make the move. I mean, if we got this here in this zone and a daily, it's stacking confluences, isn't it? Two seconds, I am just... So we got dollar news at 130. Okay. 130 New York. So we've got a little bit of time there. I'm going to jump on to the index market. Let's mark out this, bring that down. Let's clear the deck. I'm going to run through a heavy back testing session this weekend, Saturday and Sunday. If you want to join, let me know, and I'll do it live. If not, I'll just do it recorded. Okay, so let's profile the week. Oh, I'll start on. Coming towards the end of February, aren't we? I think we're gearing up for something actually. Just had another range monthly, right? So I'm presuming we're going to have some kind of wick below, close above for 50%, right? But we've also taken the opposing side on this on YM. So that means you just drop down to the weekly time frame. Once opposing liquidity is taken both sides, there's no clear draw for me. I know we're in a bullish trend. Range weekly profile, no clear change of state of deliveries, close within inside the previous bar. Okay, pretty simple. I know some people have been asking me how I determine this, and I've done a video on it, but I'm just going to go over it again. Okay, so we've wicked below on YM, we're above 50%, so other end of the range is going to go. Looks like we're going to close bullish. Okay, so let's have a little look on previous day's candle as well. Bullish daily profile. Can you see here that while we would need a little bit less confluence to take a trade on NQ and the index currency index futures triad, we haven't taken the high, so there is still available liquidity resting above this high. On a bullish daily profile, you'd expect that to be targeted. Okay, so my initial thought was we were working within this thick body candle, wicked below, started moving down, did we take that level over there? No. And now I think we're working within this candle and we're going higher, but we've already taken this. So, excuse me, we could see price develop. Thursday is built for reversals. We've managed to take the previous week's high. Have we taken it on? Yeah. So that's also another level of liquidity there. Okay, let's mark out Asia range. We'll go to the 15-minute time frame. I like to do this manually. And I store them all and I don't get rid of them because when I run through, I back test both the weeks and what's going on over here? Have to reload. My script's not loading for some reason. Great. Bear with me 2 seconds, I've just got to change this. Actually, this will give you a good insight of how the timed edge indicator works, right? Drop down menu here, you can pick your custom triad. Previous day's high showed a 50%. I don't actually use any of that. I used to, I don't anymore. Change the size of it. Yeah, correct. Show PSP. I put it on that, the little triangle. That. These are just my settings. True opens, I know where they are now, so I don't need them. I will be updating my indicator at some stage. I've got a few things I want to change, make it a little bit more towards my trading model rather than days stuff. Okay, so Asia's expanded. We could expect accumulation in London. Start to profile the market. So what did we have on? We've had a range on Monday. Monday range. Did we get a manipulation? Yes, we had a manipulation on Tuesday at the New York Stock Exchange Open, 2:30 p.m. So we manipulated lower, then we're going higher. Take out previous week's high. Well, I'll do some testing on the week. We've got a daily cycle bullish at the moment. However, I don't start trading index market until 8 o'clock in the morning because there's no Frankfurt Open really. The liquidity comes in at 8. found myself liquidity being a bit, just not there. Anyway, so we'll watch that market, see what's going on. We have got a daily cycle, bearing in mind. We are expecting a bit of accumulation though. Possibly. Maybe I'll do, if something does pop up, we'll use shorter targets or standard deviation anyway. Right, let's go back and have a look at FX. See what we're getting here. It's 7:30. It was a fantastic trade yesterday. Such a shame. 7 a.m. Classic 1 hour CRT model. Obviously, you have to use it with other confluences. You can't just take this willy-nilly. So yeah, let me go on the replay mode, and I'll show you where I got in, and I'll show you how I got out where I shouldn't have. So this was 6 a.m. I woke up to this price action, clear weekly cycle above. Right, so we're looking for one of the assets to take the high. Okay, so I was aware of the hour low there, and we've had this 2 assets take the previous hourly range high. We're looking for a precision swing point. Okay, so this is our precision swing point in here. I think this is how I got in. Play price, I think we go up. Okay, so we've got a clear level at the moment developing. I did actually look for the 15 seconds, and I should have taken it, because I know when we get these, basically we're building an area, right? We've got a precision swing point already, so we're already going to be in the market. Okay, let me just pull that to one side. But when I get 3 bars, this is how I'm looking for an inversion entry. I want it to build a level, 2 or 3 bars like this. You want the manipulation and then the close back through. Okay, so clear inversion here and the close back through. Because what all this has done is manipulated, then we're showing the volume of price going in the opposite direction. Let's just drop down to the 15 seconds if it will allow. Yeah, so you can clearly see here, right? There's normally 1 to 2 bars on, like 2 to 3 bars on the 1 minute chart. Let's play price. Okay, so on that candle you could be in. Here it will match up with the same as the precision swing point. You can see that. 4 tick stop. Or you could be, and you could really push it and move your stop here, and because it's going to fill the last presented fair value gap. But 4 ticks is pretty good. And what did I say? Right, we straight away fill the last fair value gap and we go down. My target was 50% of the previous day's range, equilibrium. So you can see there, I think that, oh yeah, that wasn't my actual entry. This was my entry. I was below here, 6 pips, 6 ticks, sorry. And the reason being, I should have got in earlier, now looking at it. So Yeah, mistake was made there. And then price pulled back, started going down. I thought, and this is why I moved to break even. I thought we were going to, because I saw this one take the high, I moved to break even, covered my stop. Bad mistake. Poor mistake. I should have just let the trade play out, took a break even, and then price just fell off a cliff. So yeah, sorry. I've had nose surgery and it's not great. It's not the best. Get like some phantom tickles and some strange stuff going on. If you've ever had it. But yeah, price ends up taking Asia low. I think takes Asia low. So there's a good percentage there. I missed out on yesterday. Poor trade management. I will do this in my back testing or video on the weekend. Anyway, let's go back to current time. So we've got a daily cycle. We can take a long. Let's mark out the 1 hour range low. So we've taken previous day's high. So we've taken a lot of liquidity there. So we need something to fuel the move. Can't just take like one key confluence trading true open like I would normally take on a distinctive daily profile. Sorry, just sorting out something. Still got 20 minutes left of this 1 hour range. Yeah, I'm a little bit disappointed with myself. I haven't been on the streams this week. Didn't feel too well, but I should have just done it anyway, rather than putting it off. Let's have a little look at the higher time frame. %, always gets manipulated. The time and the price. Bear that in mind. 50% always gets manipulated. If you see here, we've pulled back in, pulled up. Now we're pulling down. We've got SMT here with success, so maybe we might push back up. We won't draw down to this low. Let's just have a little check of the VIX today. What's the VIX on? 19.5. So we're dropping down. That's dropping down a bit. We were up at 21 the other day. Volatility index gives us an idea of what's in the market, what the market sentiment is. Risk on, risk off. If we do start to trade higher, we've obviously got Monday's high, Monday range high. That would be the draw of liquidity. Obviously Asia, then that, if we're going to go higher. So with this price action we've got in front of us, we've also got the index market. We had a large range expansion yesterday, and then we've got an Asia expansion as well. These are things to note of when you're trying to take a trade. If I'm looking at today's price action on the index market, let's get this up for instance. Okay, I'm looking at this as a profile for the market. Okay, Monday range, we had the Tuesday manipulation, because why I'm taking that, we manipulated higher. Wednesday distribution, we've continued that distribution. So this is how you can profile the market. Okay, manipulation, distribution. Thursday should be reversal. Okay, for me to take a reversal, we need to take some buy side liquidity, and that at the moment we're taking sell side, and we've got we're looking for buys. So in order to get up to that buy side, we need to take sell side, and we've taken sell side. Daily cycle bullish. But we have had a large expansion day, and Asia's expanded as well. So we're expecting a little bit of accumulation. We could see price stall until New York, stay within a range, then get something up and come back down. If we do start to gravitate towards previous day's high, New York, but we trade what we see, not what we think. Okay, so whatever happens, we trade it. Getting a wick formed here. Got 18 minutes left. Excuse me. Why I think this is building like this, and we're seeing why I think this is building like this on NQ. I'm going to quickly grab some breakfast, and then I'll restart the stream. I think, yeah, that's what I'll do. So I'll be back here 8 o'clock. We'll see how currency futures trades developing. Maybe we get a long, maybe we don't. We've got a wick forming. We could break this down onto the 15 minute, but we'll do more of that when I get back. Yeah,